Welcome everyone to this Zoom Power Hour on land fraud. This is such an important topic, and we're very, very fortunate today to have two individuals with us who are going to give you all the important details about land fraud. I'm first going to ask everyone if they can possibly put themselves on camera. It's just easier for our speakers when they have actual faces to look at. Secondly, if you could remain on mute throughout the hour, it's helpful for all of us because the background noise gets to be too much. If you do have a question, please put the question in the chat. Use your mouse to hover over the bottom of your screen to find the chat function, and you can put your questions there, and our speakers will take the questions at the end of the presentation. So not too many housekeeping details, just a couple. What I'd like to do right now is introduce our two speakers. We have Alex Shnayder, familiar to many of you. Alex is the principal attorney of Shnayder and Associates in Feasterville. He's been a Realtor member of BCAR for 20 years, and he served as the president of the association in 2015. He currently serves as one of two NAR directors from BCAR on the board of the National Association of Realtors. He is a past chairman of the board of the Suburban Realtors Alliance, and he continues to serve on that board. He also currently serves as the chairman of the board of the Bucks County Real Estate Institute, which is our real estate school. Thank you, Alex, for being here today. And with Alex today, we have Carrie Mann. Carrie is an attorney who works in underwriting for the Old Republic National Title Insurance Company in Wayne, Pennsylvania. She's an active member of the Pennsylvania Land Title Association and was awarded the 2019 to 2020, Albert E. Pentecost Service Award for outstanding service to the association. Carrie has also attained a designation as a certified land title professional. She currently serves as president of the Pennsylvania Land Title Association, in addition to being a member of numerous PLTA committees. Welcome, Carrie and Alex, and thank you so much for your time today.
Thanks, Pam. Pam, is there any other housekeeping things you need to discuss before we get started?
No,
Okay,
I'm
great.
good. Thank you.
All right, great. All right, folks, good afternoon. Now I realize it's afternoon, so we're going to get right into this. This is going to be primarily Carrie's show, but I wanted to kind of give everybody sort of a quick background on why this subject matter is important today, and why it was just recently started to sort of come to the surface. It's one of these things where the drumbeat continues to get louder and louder and louder and faster. I had originally heard of something like this occurring in a New Jersey transaction through a client of mine. I'm not licensed in Jersey, but it was somebody was buying a piece of property in Jersey and almost got caught up in that. That was probably 2 years ago. Since then, I would hear snippets of it here, there, and then as some of you guys know, I represent title companies as well, and I would have title companies reach out to me and say, "Hey, listen, I think that this is becoming a bigger problem, and I think that it appears to us from the title world that maybe the first line of defense in these issues would be you guys as the realtors. If realtors were doing some diligence or more diligence than they're doing before they go out and list a property, then maybe that would be a great measure in helping defend in some of these instances or some of these cases that come forward." So I started looking into it, and then I reached out to Pam and Lisa, and Pam was kind enough to reach out to the Pennsylvania Land Title Association, and Carrie, who is the current president there, has already been, going across the state and discussing this, and was a great speaker on this. So I thought it would be a very relevant subject matter, and that's how we kind of got here. Also, interestingly enough, the National Association of Realtors just released a study on this, which when you guys get the recording of this video, you'll get that survey as well. That survey is super current. It was just released in May, end of May. And what I think is really interesting is that one of the key stats of that is that the northeastern part of the country, which we are, is in the last 12 months, 92% of the respondents were aware of some issue that has occurred during that time that involved title or deed fraud. So you guys are in the right area where these things are happening. It seems to be most prevalent in vacant land. Carrie's going to explain the nuts and bolts as to why that is and kind of take it from there. So without further introduction, Carrie, the floor is yours.
Thank you so much. I'm so excited to be here. Yes, I've been out there trying to tell people about vacant land fraud. A lot of people haven't heard about it, but the reason it's so important for our industry is because we've seen the fraudulent transactions go through, and unwinding those transactions is much more difficult than having to stop the transaction to begin with. So, hopefully, what you get from this is an idea of what we mean by land fraud, the targets, the properties that are generally targeted for land fraud, and some things that you can do in order to, in your practices every day, to try and make sure you or your clients are not becoming a victim of land fraud. So with that, let's talk a little bit about what is it that we mean. What is land fraud? It's essentially someone stealing a property, but you think that how can one steal property, because it's not something that you could just pick up and take with you. What happens is someone who is not the owner of a property transfers the title to the property. So they sign a deed pretending to be the true owner of the property, or the person that has the right to sign that deed, and then transfers the property to an unsuspecting purchaser. So they do this in a couple of different ways that we've seen. And I should mention that fraud schemes are always evolving, because once we plug one hole, it seems to be that they find another hole that we hadn't thought of before. And realtors used to be, it used to be that if the transaction involved realtors, we would feel better about it because they weren't using realtors to list property. But they've realized that and are now starting to engage the realtors in their schemes. Not that the realtors actually know that it's fraudulent, but they've started to use a realtor to list the property to make it seem more legitimate. So, fraudster tactics. So these are the most common ways we've seen land fraud happen. Having someone pose as the owner of the property who presents a fake ID or has the same name as the owner to appear before a notary. Um, Fake IDs apparently pretty easy to get now. I'm don't need a fake ID, and I'm a pretty big scaredy cat, so I would know how one goes about getting them. But in terms of the internet, I think you can pretty much get anything, any sort of fake ID that looks realistic. So that it's the technology is making it easier for people to fake things. Notwithstanding that, it's also making it easier for us to do the legitimate things. I've also seen it where you have a very common name and title, um, Robert Brown, or something similar to that, and they just find someone named Robert Brown and who presents a legitimate ID, and so that that part can't be caught. They pay them 150 bucks, because most people don't understand the power that they're wielding when they are signing a deed. And then so it's a legit signature. Legit Robert Brown is signing it, but it's not the right Robert Brown, who's actually the owner of the property. um, so also having someone pose as the heir of a deceased owner of the property is a pretty big one. Um, this happens quite often in the Philadelphia region, but we're seeing it more and more spread across the Commonwealth, where sometimes it's very hard to prove is who is the heir of a property, who is rightfully entitled to the property once the true owner passes away. And while all of this goes through the Register of Wills, generally speaking, we take deeds from an admin of an estate, an administrator of an estate. they can fake documents to get the Register of Wills to award them what are called letters of administration, which gives them the power to act on behalf of a decedent. So we've seen that quite a bit too. Forging powers of attorney. I know that many people want to not attend settlement nowadays. Why do we have to go and sit there and everything should be quick, quick, quick? Can't I just give you the authority to sign it? And we'll get into this a bit more in a few slides from now, but we're really reluctant in the title industry to take those. They have their purpose, and we'll talk about that. But what we've also seen is people either abusing a power of attorney or forging a power of attorney. So creating a power of attorney for the legitimate owner, forging their signature, having a notary stamp put on it, and then using that to convey property. So in that case, they are signing in whatever name they're using to act as the agent of the true owner. But what they've actually, so they're not forging the deed itself, but they're actually forging the power of attorney. And then last is forging the owner's signature and the notary's signature stamp. So what happens in this case, they'll do a quick deed where they put it on record and they forge the owner's signature and a notary's signature and stamp. So I've seen them replicate um, true legitimate notary stamps and tag it on and use that as a way to legitimize a deed. And then what happens is now we have that deed of record, and then they go and find an unsuspecting person that doesn't realize that that first deed is forged or invalid, and they'll buy it and pay that fraudster the money that rightfully belongs to the true owner of the property. I've seen this, like I mentioned, I've seen this happen. I believe there was a notary out of um, one of the legal aid societies that had her notary forged. I think there have been very reputable title agents that have had their notary forged too. So it's all because once again, thanks to the internet for making things accessible, but it's also making things accessible for criminals. So it's pretty easy to get a forged notary stamp or to forge someone's notary stamp. And I think to kind of highlight how bad this is, I wanted to highlight the Graceland scam because Graceland, very famous property. And it seems like that would be impossible to steal or try to steal. But someone did try to steal it. So what happened was they forged Lisa Marie Presley's signature on loan documents. And then once she died, they foreclosed or were attempting to foreclose on the property, and they had to and Lisa Marie Presley's daughter had to defend against that. And interestingly, this was supposed to be, they interviewed the notary. I saw an interview of the notary that was alleged to have actually done the notarization of Lisa Marie Presley's signature. And she said, I was a huge Elvis fan. You think I wouldn't know who Lisa Marie Presley was? I'm absolutely positive that I did not notarize this. So I guess the point I'm trying to make here is if Graceland can be a target, pretty much any piece of land possible can be a target. So keep that in mind, and I'd recommend Googling it because it's an interesting story, at least for a title nerd like myself, and I'm admittedly that. So all right, so where is it happening in Pennsylvania? So often we could blame things on Philly, that, oh, this is just a Philadelphia problem. The criminals are just targeting Philly. And yeah, for a while they did. That's where most of our fraud bulletins, and we'll talk about that in a moment, but most of the fraud we were catching was coming in Philadelphia. And there have been a lot of efforts with the current recorder of deeds, Jim Leonard, to prevent fraud from happening or doing what they can in terms of education to prevent land fraud. But it's actually spreading out across the Commonwealth. And I think this is not a scientific study or anything, but I think what's happening is there's such a demand in the market for new housing. So they know that people really need property. There's not enough property to sell. So they're finding these vacant, and it's not just in Philadelphia where they need the property. So they're finding these vacant parcels, or the unoccupied structure parcels, and attempting it elsewhere. I think what's most surprising to me that's happening a lot right now, and to the extent your practice extends beyond Bucks, this might be interesting to you. Um, the Poconos, very big in the Poconos right now. We've caught a lot and been hit by a lot. And when I say caught a lot, I mean preventing transaction from going through based on the spidey senses of the realtors and the title agents. But then we've also been caught, and by that I mean is a transaction went through, and then we realized it was a fraudulent transaction. So we had to deal with it from there, and we'll tell you a little bit more about what happens after if the fraud actually goes through. So in sum, it's happening everywhere in PA. PA and Pennsylvania, there's a lot of properties that we have an aging population, and there's a lot of properties that have just been in title the same family for a very long time, and we'll get into that right now about the properties that are targeted. So it's primarily vacant land or land with unoccupied structures. And then it's also properties held by the same person or entity for an extended period of time, and properties without mortgages on them. Here's the idea behind it. They're looking for properties that they don't think people are paying attention to, and that a buyer wouldn't be able to walk up, knock on the door, and talk to someone about who actually owns the property. That is their easiest target. And so that obviously is vacant land or land with unoccupied structures. What I mean by that is often you see homes that have been vacated because the owner died, and the families, either they didn't have family or the families just didn't do anything with the property. So they're looking at those two. And again, with this idea of owned for an extended period of time, they think they're more likely to be deceased or not to be around and coming back for it. And the properties without mortgages on them are more lucrative for them because we don't have to pay off anything. And further, we don't have to get any authorizations to get a mortgage payoff. So once you start in this realm of paying off mortgages, it's not as lucrative. And I think there are more ways to catch it once we have to pay off actual mortgages. So some red flags from a realtor perspective. Client reaches out to you unsolicited, usually through email. I know many of you spend a great amount of time marketing, and that's absolutely necessary in your business as it is in ours. And so it seems great when you get this unsolicited and they say, "Oh, I saw you on Facebook." Sorry, I'm an elder millennial, so Facebook is still my thing. For those of you that are younger and use more
Yes.
hip types of social media, but so they'll reach out to you through what and say, "Oh, I saw your TikTok, your thing on Facebook, your post on Facebook or LinkedIn. Would you be interested in listing this property for me?" So it sounds great, but it should go slowly. Is my point, and think about it, particularly if it's a vacant land or land with an unoccupied structure. They will not talk on the phone. And I know this has to be incredibly frustrating because I'm even falling into this more and more, is that I kind of like to just be able to text. But, I know my dad doesn't even understand where to hit the text button. So if I would text him, it would just be completely lost upon him. Not that I'm discriminated against age, because there are obviously many people that are older that are very good at that, just not my particular father. So I like texting. I get it. It's the quickest way. It's how I set up play dates for my kids, or who's driving whom and where. But and I emphasize this a lot with younger attorneys coming in, younger title people coming in. Sometimes you just have to pick up the phone. A lot of times it makes it a lot easier to figure out an issue, but B, and in this case, it's making sure you're talking to a human, to someone. Of course, I think the next question, if you're following anything with how tech is going, is could AI fake it? Fake a telephone conversation? And sure. So that's why you have to meet your client in person, and I would do it at the property. Because they will often say, no, 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 I'm traveling, I can't meet you, and have 150 excuses as to why they can't meet you in person. So it's well, I get that a lot of people want simplicity and want to be able to do everything virtually nowadays. Insisting on that meeting at the property is very important, because a lot of the fraudsters will refuse to meet you. They don't want to send anyone that you can identify, and tag back to them in any way. So, from a realtor's perspective, what can we do to catch land fraud before closing? Like I said, insist on a meeting with the client at the property. At the property is particularly important, in my opinion, where there's a structure, because what we've seen in the Philadelphia region, is often there are heirs to someone that has died. There's family members to someone that has died still living in the property. And what the fraudsters will say is, oh, just a tenant, there's a lease, we'll sign the lease. But if you actually talk to the people, they would tell you, no, I'm not a tenant. I own this property because my grandma owned this property and I've been living here since I was a baby. So really insisting on meeting the client, the property, and the unoccupied structure is super important. But it's also important so that you can connect them so that they can't give you the, well, I'm in Georgia. And that's great. And a lot of times that's going to happen. But forcing them to be at the property is going to scare them away to the extent they're fraudsters. Um, this one sounds really simple, but the amount of times we've caught it, after the fact is pretty impressive. That's probably not the right word, but it's amazing how many times we run an internet search after a fraud has happened to see if the property owner is actually alive. And it turns out, no, we have an obituary for them. So this often doesn't require, fancy subscriptions. There are services, and a lot of title companies have them, where you get access to the death database, things like that. You can run, Find a Grave, or just Google and get the obituary for people. Now that what's nice about the internet, again, pros and cons of technology, but it used to be, for in Philadelphia, for example, it was very expensive to publish an obituary in the Inquirer. I know my father-in-law didn't have one. It was just a brief death notice because of how pricey it was. But the funeral homes are now doing it. They're just posting one online. So it's no longer do we need access to like the Inquirer's records or the local paper's records, because the funeral homes are offering this as a service now. So it's really beneficial, and running the name of the person you're talking to, but B, when you should go and figure out on the tax records, who the county thinks is the true owner of the property, and run that name as well. Sometimes you'll see that the true owner is dead, and there's legitimate explanation as to why you're talking to someone else. But it's really about getting to that explanation and forcing them to explain it, in order to prevent someone from posing as someone who is deceased or an heir of someone who's deceased. Another tip would be reach out to a title agent to see if the property is on an underwriter's alert list. I think all of your large underwriters, the big four, which is First American, Old Republic, Fidelity companies, and Stewart, but I think even the smaller ones do this as well. They have a list of properties that say we tell our agents, do not insure this property, do not close a transaction on this property until you talk to underwriting. And generally, those are created by virtue of a suspicion, that something's wrong. What happens for a title agent is they will review the chain of title. It's all of the deeds that have transferred the property from one person to the next person. And we understanding how fraud works, there we can catch some things. So for example, if we have a deed from 1966, and now we have a deed from 2025, and it's purportedly the same person, you're going to ask questions. That's possible that it's the same person. But we're going to ask some questions. And often what we are able to do is take the signatures from a deed with a prior mortgage that was untitled, compare them. While we're not handwriting experts, it's pretty appalling how bad and different the signatures are. So we will catch things like that in the examination process, and then say, well, and in those cases, it doesn't mean that you can't ever transfer title, but we want to make sure we're taking the necessary steps to suss out any potential fraud. Another way that title underwriters will issue an alert is if it's caught by our agents, and that's most often what happens. Is our title agents just didn't feel right about something and kept pushing and pushing, and then finally realized this isn't the right person, and they got a hold of the right person who said, no, I'm not really selling the property. So we'll get contacted by a title agent who says, look, I think this is fraudulent, and then we'll issue an alert. So it's not a foolproof system, but having a title agent that you have a relationship with, just run their underwriter's alert to see if there's anything there. And why it's not a foolproof system is that we don't share them between the underwriters. It's not like there's a universal alert list. It's company by company, and then every title agent has different underwriters that they work with. But it's a step to at least try to take when you are feeling off about a transaction. And then this is the biggest one that has I think caught, I would say in the past 6 months or so, it's caught 5 or 6 frauds, is that they sent a letter to the address listed in the tax records where they wanted the tax bill sent. It doesn't work as well if there's a mortgage on the property, obviously, because most of the time that address is going to be to your lender. But it does work well if there's no mortgage. And as we talked about, that these fraudsters are really targeting the no mortgage properties. So often what's happened is how we're preventing this is we send a letter. Someone in the transaction sends a letter to the address listed in the tax records. Highly recommend FedEx because, well, I love the USPS. Sometimes it's, a little slower, might not be as fast. FedEx are an overnight delivery service, and then they get a call back from the true owner of the property, and who will say, no, I'm not selling my property. So it's a great way, or they get a call back and says, yep, that's me. Thanks for sending, so it's not a bad thing to try and do this. It actually shows, I think, I believe it shows that you are protecting the rights of property owners by doing that, because you want to make sure you have the right one. So if anyone's ever, suspect about you doing that, consider that you're protecting your clients and the rights of other property owners from fraud by doing that. So what I want to move to is things that a title agent might require to prevent fraud, because so often we are asked, why is that necessary? And what I want to start with is we are all here for the same purpose. No one, title agent or realtor, makes money unless this closes, right? A transaction closes. So while it might seem like title is a barrier to us all making money, that's not what we're trying to do. We too are trying to make money. I have children, they eat a lot, I need to feed them. So we are all trying to get to the same point. So when you have a title agent that is requiring something extra, it's fine to ask why so that you can explain it to your clients, but also just making sure that you're cooperating with them in order to keep everyone safe. Because we'll talk about this shortly, but whenever deals go wrong, it seems to me that everyone gets sued. Prior to being in title, I represented realtors. In failure to disclose cases, I represented title company insureds. And at the initiation of a case, the start of a case by someone, they don't always know who to sue, so they'll sue everyone whose name is possible. So it's really important, everyone whose name is tied to the transaction. So it's really, just think of that as we're all trying to get to the same thing. We all have the same goal, which is to get our clients into homes, B, to obviously, receive the benefits of that. And from our perspective, in terms of getting paid for the valuable services that we provide. So some of the things a title agent might require, having documents signed in person by a notary trusted by the title agent. This again goes back to the idea that, why do we have to be in person? Why do we all have to be there at the same time? And I don't think that necessarily has to be. It doesn't necessarily have to be at closing. But if a title agent might be able to say, all right, seller, if you can't make it on the day of closing, come to my office this day prior to closing, sign all the documents before me. Or, all right, you can't make it, let me send a notary to you rather than you going to your local bank to get something notarized, or to an auto tags place down the street. They can send mobile closers to the seller. And the reason behind that is we do lots of education about what to look for in fraud. And one of the examples I like to use in a fraud case is they gave an ID. So it was a person probably in their 30s or 40s that was actually signing. But if you look at the actual deed, this person could not have possibly been that young. They took title well before they were born. It could not have been the right person. A notary at an auto tags place is not trained in that same way to look for that issue and to understand that that is an issue. So making sure that we have a notary trusted by our title agent is very important to us, or doing it in front of the title agent. The other reason is, as I mentioned earlier, one of the tactics for stealing properties is to fake notary stamps. So this whole signing outside of settlement, how do we know that that notary stamp is actually real and not fake? So that is why a title agent or a title person might require someone to come in person or have a notary sent to their office. The other thing a title agent might require is using a remote notarization platform. I want to caveat that with every underwriter may have a different standard for when they will allow a seller to remotely sign documents. So for anyone not familiar with this, there are now technology providers who have a system wherein a person signs in, proves that they are the correct person, and then they have a notary that is sitting somewhere else actually notarize the document. That is a permissible way in Pennsylvania to notarize a document, provided that it is an approved provider by the Department of State. But again, every underwriter might put different standards on when they'll accept that, because it is a newer form of notarization. It wasn't until there were remote notarization bills floating around for 3, 4, 5 years in Pennsylvania. And then once COVID happened, it really sped it up. It was at first an emergency authorization, and then it became the final bill. But it was still, people don't necessarily trust it as much because it's new. I actually love the idea. And the reason I do, and I like to talk about how bad I am at answering the identity proofing question. So when you log into one of these platforms, it's similar to when you're logging in to get your credit report. And I know I've seen recently that they're changing that a bit, but originally when we used to have to pull my credit report for, bar membership, things like that, it would ask me, what address did you live at in 1997? And between my childhood home, college, I moved every year, law school, I moved every year, and then I moved to the Philadelphia area. So that's about at least 7, 8 addresses. And I studied abroad. So I don't remember all of them, and I would fail them. In fact, when this remote notarization started being used, I believe the story is a title agent's husband kept failing it. So, and then they don't let you just keep trying. You have to log back in another time. There's a waiting period. So I love that extra step because when you just have a regular notary, all they're looking at is your ID. this extra step of really proving who you are is, I think, fantastic. It's a fantastic fraud prevention tool. But the other thing is, they record the whole signing. So from time to time, we've gotten people saying who did actually sell their property, but had some sort of buyer's remorse. Nope, I didn't sign that. Or most often it's, no, I didn't sign that mortgage. And my idea is that with remote notarization, we now have a video that they have to keep. I believe it's 10 years in Pennsylvania, so that we can prove, yeah, you did. So, and plus, if someone's on video, it's I feel like criminals are really less likely to agree to appear on video. So it will detract them. A favorite story I have, I know I have a lot of favorite stories, but no one in my house likes to listen to them. So sorry you're getting them. So my favorite story is we suspected fraud. We expected we didn't have the right seller. It was, well, I can't appear. I'm in Texas. So I can't appear. No, sorry. The first thing was, I have a trusted notary. My family has a trusted notary and we will only appear before them. And we said, no, you can't do that. And then they said, well, I'm in Texas visiting family. So we said, okay, let's do remote notarization. We'll take that. No, I'm having a problem with my corneas right now that makes it impossible for me to review any of the technology. During all this time, and then, I absolutely said no, either get on remotely or appear at an office and where I tell you to in another state, and they wouldn't do anything. But during that process, someone sent a letter to the owner, in the address and the tax records, and that true owner called back and said, I'm not selling the property. So it's just another way of, I don't like to call it a barrier, but it is a barrier to, it's not a barrier to anyone, in my opinion, that is legitimately selling their property, but it is a barrier to fraudsters to try and prevent them. Another thing a title agent might require is having your sellers produce their IDs in advance of closing. And that is to compare the dates of birth and the names to what we're seeing on title to make sure that we have the right person. We also might refuse to take a power of attorney. And again, powers of attorney have their place, particularly in an aging society like we have in Pennsylvania, in that, when your parents are in a rest home or they have dementia, they're absolutely necessary. And I think any underwriter, any title person understands that. The problem is that they've been abused. And people are recognizing that as a loophole. Fraudsters are recognizing that as a loophole. So we prefer, and it goes back to the idea of them signing in person. Can we send someone to them? Is there a way to get that done that we don't need to use the power of attorney? And then limitations on where settlement proceeds can be sent. In my perfect world, every transaction would end with the settlement proceeds being transferred to an account where we can see that our sellers own that account. Now, there are situations in which an underwriter might agree, all right, give it to the beneficiaries of a trust. Give it to someone that's related to it in some way. But most of the time, our answer is no. It needs to go to an account that matches the names on our title. And that is so that we can say we sent all the proceeds to the person on title. So if ever you have a client that wants to send it to, oh, I want to send it to my business account, keep in mind that if a title agent were to come and ask me, can they do that? I would probably say no. I need a darn good reason why you can't give it to an account with your name on it, and it's because of this. It's preventing the fraud and also being able to show that the money is going to the correct person. So can your clients prevent their land from being stolen? And the answer is unfortunately no. As a recorder of deeds, their job is to accept documents for recording and that meet basically appropriate size standards and fonts and are notarized and are dated correctly. But their job is to accept those documents and then put them into an index so that we can see who owns what property. And we want it that way because we want the legitimate transactions to be able to go smoothly without someone who may not necessarily have all of the training or may not be an attorney saying, nope, this isn't legal, you can't do that. So it's not the recorder of deeds roles to reject deeds based on fraud. Now, I will say some recorders have taken some steps to just look at certain kinds of deeds more closely, but ultimately they are supposed to record what is presented to them as long as it's in recordable form, which just means it's meeting their size, font, margin requirements, their signature requirements. So they can't legally reject documents like that. And anyone can record a document. I can show up tomorrow and record a deed from me and my husband to just me. But what we can do is put our names on or sign up for title monitoring. And so I've included the link here. PLTA has a running list of what counties are offering this service. Bucks County, and I believe all of the 5-county area offers this. And what it is your recorder will contact the owner of the property anytime something gets recorded against their property. And you might think, why is that a good thing? It doesn't prevent it from happening. That's true. But the faster you catch that it actually happened, the better. Because what often happens is you see a series of flips or a series of transactions going through because they're trying to, it's almost like laundering money in a way where they try and flip it from one person to the next to the next. And then if you can stop that from it getting to a legitimate person, it's better. And because what happens is the ultimate legitimate person that's going to buy it is going to want to build, most of the time, build on it, remodel it, do something with it. And that involves the investment of even more money. And once that ultimate buyer invests more money, they have more to lose, and it makes it harder to clean up your title because they're going to fight to keep the property more often. So having that ability to sign up and know right away that something's been recorded against your property is fantastic, and it's a fantastic service that the counties in this area are using, and it's spreading more and more throughout the Commonwealth as well. So if you have a transaction that's not in this area, be sure to check in to see and recommend that to your clients that, hey, all right, you purchased the property, great. I'd recommend you sign up for this. In addition to everything else that they bought, I know you're in the moving process. I got it, but sign up for this, even if it's not a vacant land. I have it on my property. I think most people in my office have it on their properties if they've purchased since this has been, and it can be done. It doesn't matter when you purchased it. It doesn't, it can be done at any time. So highly recommend everyone signing up for that. All right, so what happens if fraud is not caught before closing? The bad guy is going to be long gone. They're taking the money and running, as Steve Miller would say. So they take the money, and often it's wired offshore. So we generally don't like to automatically wire to a non-US account. Sometimes we have to, but so even if you wire to a US account, they'll immediately wire it into another account that's offshores, and making it very hard to recover it, and it'll be transfer and transfer and transfer, and the money trail gets rougher to follow. So we're not getting the money back from the fraudsters. And again, this is why properties that don't have liens on them, that don't have mortgages on them, are so appealing to fraudsters. Because when you have like a payoff of a mortgage, and if we catch it really quickly, we might be able to pull back that payoff and have some money to reimburse. But most of the time, that money's long gone. By the time we catch the fraud, long gone, and there's no one to go against to get that money back. So what usually happens is that two innocent persons are fighting over a property because the bad guy is gone. Your buyer didn't know anything about it. They assumed that it was the right seller. They weren't involved in the fraud. But then the seller didn't know anything about it either. So their property has been stolen. But what happens ultimately is most of the time the real owner is going to prevail. And they will file, once they figure it out, they have to file litigation against the owner of the property to ask the court to say, nope, that transaction was no good. We're striking that deed or deeds and giving the property back to the real owner. So it's an expensive proposition to actually clean up. I think you'll see in the NAR reports that it references um, some legislative efforts regarding cleaning up fraud. All of those are fantastic and great, and I fully support them. The problem is having the manpower and money to actually litigate these matters. So I think a lot of times what happens is people that are victim of fraud do not have the resources to file the necessary litigation to clean up the title. So it's thank goodness for legal services and anyone willing to do that in a pro bono situation, but it does become an expensive proposition. And to the extent you are a victim on the buyer side, you would have to pay for an attorney to represent you, which leads me to the next thing, which is get title insurance. Yes, I make money from title insurance, that's admitted, but I referenced this before. I originally was a litigator. I litigated these title matters. Then I went into the claims department for Old Republic before I became an underwriter. So in claims, what I was doing is directing this litigation. So I would review a claim from an insured. So what would happen is an insured would get sued by the true owner of the property with a lawsuit that says, hey, that's really my property. The insured gives it to our company or their underwriter. It's called tendering the defense. And then the underwriter has an obligation to cover the cost of defending that litigation. And then if they can't defend the title, and what I mean by that is if they can't establish in court that we have good title to the property, the underwriter has to pay the loss arising from the fraud. Generally speaking, what that's going to be is a policy amount. Whatever your client's policy amount is, policy amounts for title insurance are for the most part based on how much you buy the property for. So whatever the purchase price was, the title insurer will give you a policy equal to the purchase price. There is some wiggle room to get something larger if you're planning on developing the property. But for the most part, what I've seen in these situations is they get a policy for exactly the amount they paid. The problem with that is that so often it's an investor that has bought the property and they have already sunk a good deal of money into it. So even though they are getting what they paid back, they're still losing any other funds they've put towards it that wouldn't be covered by the policy. And so it never results in anyone walking away happy because you have your true owner of the property that's just had to pay legal fees to actually get their title back. You have the ultimate purchaser that, while they didn't have to pay the legal fees, the title company did. They might have lost more money than they're actually entitled to under a title insurance policy. And it's just so messy. But I will say that, to bring it back to my original point, I just had a transaction where I was concerned. It kind of checked all the boxes in terms of, all right, I need to be hyper vigilant about this. And so I was working with the agent to make sure that the true owner had passed away. It was his daughter selling, and I was working with our agent to make sure that we had the right person. And I made this woman jump through hoop after hoop after hoop until finally I said, well, there's no reason for me to say no at this point. Ultimately, though, what happened was, so we were in between our closing and getting our deed actually recorded to our insured, another fraudulent deed gets put on record, purportedly from this deceased owner, the deceased seller, to someone else. And so then it became a problem of my company had to step in and defend litigation where to argue that our insured had true title. We won but we spent over $20,000 trying to defend the title. So the cost of attorneys are well paid. They're, in my opinion, worth that money, but those bills do tend to add up quickly when it comes to litigation. So it's very important. I always think title insurance is important, but particularly for your investor people. A lot of times I hear from agents that deal with investors a lot, oh, they're just going to sell it really quickly. They're just going to flip it and sell it really quickly. So they don't need a policy. They're only going to hold title for like 6 months. Well, this happens. And so now they have no coverage whatsoever. And they are out there defending, having to pay an attorney to defend litigation. They don't have anything to fall back on if they can't establish title in their name. So highly recommended, even if you have these flippers that don't plan on holding title for a long time. Title insurance is so important. You will even now see when you have a 1031 exchange and it has to be taken by another company to hold it for a bit. They even though they know they are a temporary owner, they will even request title insurance coverage. So very important. Another thing I wanted to note is, so there are two different types of policies that we offer to individuals. If you have someone buying a 1 to 4 family structure that they're going to live in, have them consider um, buying what's called our homeowner's policy of insurance. So how a standard policy works is we only cover things that happen prior to the policy date. So far we've been talking about preventing fraud from happening. And so if the fraud happens prior to the policy date, it would be covered. But let's say someone tried to steal my house, it is not going to be covered under a standard policy. Under a homeowner's policy, though, I would get coverage for fraud, that if someone tried to steal my title, I would get coverage under that policy. Now, that policy is 20% more expensive, but it offers that post policy coverage. You might say, Carrie, you've just sat here and told me that they're targeting vacant land or unoccupied structures. Why should we care? Because it's not either of those. Why should we care about the post policy fraud? And I think the point I want to make again is, once we close one loophole, they're going to try and find another loophole and target something else. When they realize that their fraud is not working in a specific area, they'll try something else. So for both of my homes, I've bought it. Again, it's only available for a property that has a 1 to 4 family structure, and it has to be an individual buying, like a human or a trust buying it, and you have to be planning on living in the property. So that's what I would recommend. So my coverage basically for any fraud for my house is, not only do I have title monitoring so that I can get a letter quickly, and then I would immediately turn that over to my title insurance company, which is in fact Old Republic, who wrote my policy, but so that I would get coverage under my homeowner's policy. So with that, I left a little time for questions. So I'm happy to take anything. And here is my email address. If you have questions about anything and aren't one to ask in this kind of forum, feel free to reach out to me. So
Carrie, there's
turn
a
it back over.
question, posted about enhanced policies. Is an enhanced policy needed for this coverage?
Enhanced is another way of saying homeowner's policy. So for the post policy, for any pre-policy, so prior to the purchase date fraud coverage, you only need a standard policy. All policies of title insurance cover any pre-policy fraud. So, but for that additional post, if someone were to try and steal my property now, it would have to be the homeowner's policy, also known as the enhanced policy of title insurance. But again, that is limited. It's limited. It's meant for actual humans, not investors. It's humans that are going to live in a home. So,
Got it.
Great. All right. So, Carrie, that was incredible. I'm sure it was a lot of information for all our folks here. I just wanted to just hit a couple things here real quick because we're kind of limited on time here now. So the first thing I just wanted to sort of flesh out a little bit is the the title insurance policy would cover the defense of the buyer of the property, or a bona fide buyer of the property. Uh,
Yes.
the seller who finds out after the fact, after they close, and they have to file, quiet title action, and it's costly, and time consuming. They're on their own, right?
Correct. A title insurance policy only covers the insured, so that's the buyer of the property, or a lender if it's a lender. So the seller is absolutely on their own.
Yeah. So for you guys to think about this practically, what ends up happening is, you could be a true owner of a property, and find out about this after the fact, and it seems sort of inequitable, but you're going to have to spend a lot of money to try to get your own property back. It, it sucks, but that sort of underscores the necessity to be vigilant to defend your own property. Um, which kind of brings me to the next point here, which is anecdotally, it's my understanding, and maybe you can correct me if I'm wrong. Uh, Most of the time, sellers are finding out about their property being sold, uh, out from underneath them, for lack of a better term, through uh, websites like Zillow and things like that,
Mm,
where they'll have a friend, or I've heard instances where investors have been steadily chasing after somebody for a very specific property, and then they reach out to they've been diligently chasing after the homeowner to buy it, and then all of a sudden they see it listed on Zillow, and they reach out to
mhm.
the homeowner and say, or to the landowner and say, hey, I thought you were going to reach out to me when you're ready to sell. Is that
Yeah. I've heard of that too. Yeah. So actually, Zillow has identified a number of claims for people. Like, say there was a mortgage that for some reason was never satisfied, and it'll start to say pre-foreclosure, even though it was really paid off. Like, I've seen that. Zillow is actually a pretty useful tool, in that regard. But yeah, I've heard of that happening too. Yep.
so I'm hearing that quite a bit. And then just one last thing that I think particularly important for the folks that are on here is, um, from the perspective of litigation and or culpability and or liability and exposure. What do you see? I mean, as licensees, realtors in particular, what kind of culpability do they have in these scenarios, or what kind of exposure do they have?
I think that's, I mean, obviously an interesting question. Um, I think what generally would happen is they're going to allege that you knew about it or something to that effect to bring you into the litigation, that you can disprove. Um, but then I think the question is going to turn to, were you negligent in some way? So did you take all of the steps to try and prevent this from happening? I think this is kind of a newer area. I don't know that. So what negligence is usually based on is, we'll call it the reasonable licensee standard. So what you need to do what a reasonable person would do. So I think that educating yourself on this topic is super important, and kudos to you for taking those steps, but also keeping in mind the tips that we've given you, and just keeping abreast of what's happening with this type of thing is super important. Unfortunately, though, it still involves attorney's fees. So if you don't have appropriate coverages in place, you're still going to have to defend yourself. But I see it more as that the culpability would be along the lines of, can they prove that you should have done something different? Or did you ignore all of the warnings, all the red flags out there? That's where I would probably see it. Practically speaking, and I think you can speak to this as well, from a litigation standpoint, most things do not go to trial. And
Yeah.
most things are not decided by a court. What happens is things settle out. So a lot of times what happens is people just kick money towards a settlement, in order to get the litigation to go away, because it's going to be more expensive to actually prove that you were right, or you did the right thing. So even if you have done all of these steps, to the extent, that's why prevention is so important. Stopping the sale before it happens is so important, so that afterwards, there isn't an argument there that you were negligent anyway. So I'm not sure I've seen any sort of order against a realtor yet, in this regard. Um, but that, I mean, but I just wouldn't want to be involved in it at all. So I would try to do everything I could to prevent the fraud from happening.
Yeah, I agree. I mean, I think at the end of the day, while it may not necessarily be, you might not find yourself in court, you're certainly going to have really uncomfortable conversations if you get
Yeah.
a litigator who's going to start chasing after what I refer to as cast the widest net. They know
Yes.
that realtors have errors and omissions insurance as a general rule.
Yep.
They're certainly going to at least make an argument that you didn't do the reasonably prudent thing that a realtor in your situation would do. You have to defend that. You're definitely at least eating your deductible on your errors and omissions policy to defend that. And at the end of the day, maybe you did do everything right, but you're still gonna have to defend that, and that's not a comfortable conversation to have. So yeah, so you guys taking this course or taking this power hour and staying vigilant and maybe having a checklist and keeping track of those things, the things that you've done. Is a really good way to make a litigator uncomfortable when they ask for your file. I did this for the checks. I took this class. These things all happened, and this is how we got that. So again, we're after our time. So just one other thing I just wanted to bring up. Um, I think you guys, we talk about RPAC and things like that all the time as realtors. I will say that one of the bills that we've been uh, really endorsing, and I know that Pennsylvania Land Title Association has as well, is House Bill 1406 in the Pennsylvania House right now. It's out of the House at this point. It was introduced by Representative Chris Rabb of Philadelphia, and it's the idea is to amend Title 18 of the Pennsylvania Crimes Code and to create a new criminal offense for deed fraud. So right now this is purely a civil matter. What legislation is trying to do is also make this a crime, right? So it's costly, as we've been discussing, to try to defend these claims and do these things. But in addition to that, they're under this House bill. They're going to have the ability to make it a crime and be able to prosecute these folks that are out here doing these things as well. The bill actually just passed the House June 24th unanimously. So this is a bipartisan supported bill. It has gone into the state Senate to review right now. It's currently with the Senate Judiciary Committee, and hopefully, if they pass it, we'll hear more about it, and it'll sort of help us with these cases in the future. Pam, George, Carrie, I
Right.
really appreciate your time. It was amazing.
Yeah.
Yeah,
Thank you so
thank you
much.
so much. There were two questions posted quickly. One is a question about the owner's policy. Can that policy be added after the date of settlement?
You can buy a policy at any time during
Okay.
your ownership of the property. So yes, but they would still
Okay.
go through the whole searching and clearing
Right.
title before they gave you a policy. Yeah.
Right. And the other question was whether realtors should be asking sellers for ID up front.
I mean, I would,
Yeah, really.
but I think that's just, yeah, another step. I would sending the
Yeah.
letter. I think I think some people are reluctant to have any sort of private information of people, and I certainly understand that. So you really have to weigh the benefits of how you keep that information versus actually seeing it. But
Right.
I think as a realtor, it's prudent to do so.
Exactly. Well, thank you so much for your time, Carrie and Alex. We really appreciate it. And everyone who's listening and watching, stay tuned. You're going to get an email from us with this recording. So thank you, everyone. Enjoy the rest of your day.
Thanks,
Thank you.
everyone.
Thanks,
Thank you.
everyone.